Hey guys, Mike here. So happy Halloween to everybody. Gonna go out trick-or-treating later on a little bit as soon as it gets dark here. So I hope you guys have fun with that. And obviously it was kind of like a blah day in the market, right? We didn't have any huge swings or anything, nothing spiking up. There was something going on in certain sectors which you need to pay attention to because some stocks in those sectors are reporting. And so if you own stocks in those sectors, you know, you're going to be affected. And so watch out for it because you're starting to see a trend, especially in one, which I'm going to show you. And of course, more news came out today, which we're going to go over, and then we're going to go over what to look at for tomorrow because it's going to be a huge day tomorrow in the market. Very busy. 33% of the S&P will be reporting this week, and so it's a busy one for that. But I did want to start off with something somewhat funny. Anytime I can poke fun at Jim Cramer, I can't help it. Saw this on Twitter today, and it said researchers did 100 simulations to see what would happen if Jim Cramer was a pilot. Here's what happened 95% of the time, and I'm sure you can probably guess. By the way, there's no people in this plane, and yes, crash and burn, and you know, obviously that's probably why you saw him crying on a live set over a stock pick. And then you go on to President Biden, and he talks about, you know, look, he's calling U.S. and oil gas companies to use their record profits to lower costs for Americans and increase production because gas is going up again, or pay higher taxes. Here's what I'd say. Can we just start off right here? Can we stop subsidizing them, for God's sakes? I mean, we spend billions every year subsidizing them with tax cuts and everything else for exploration, all this other stuff. How about we just stop that first? Can we agree on that one, please? And then, you know, look what's going on in Europe. And this is, I said this months ago, you're going to start seeing this. They are running to try to get some debt, but they're like, please, we need liquidity. And you can see that bar right there is a lot higher than the other bars, except for in 2020 for obvious reasons when companies were shut down. But yes, high-grade firms are like, please, please give us money because we don't know what the winter is going to be looking like over here or what Europe's going to be looking like with everything they're fighting right now. And so that's going to be interesting to see. We ain't even, I mean, here, I don't think we had to rush on that yet. But the other thing is, like I told you, we're spending on services, guys. This is services versus good. And you can see services is winning out over good. You've seen this in earnings calls. People who make goods are hurting. People who do services usually doing pretty dang good, especially restaurants, vacations, things like that. And that, you know, because why? I mean, 70% of our economy in the U.S. is services. We don't really make much anymore, okay? Our government has seen to that and shipped all that overseas for them to be doing all that. And so that leads me into the sector you need to be watching out for because most people own stocks in this sector, and that is the chip maker or semiconductor sector, right? And you saw today what happened. On reported earnings, they beat top and bottom line, but it does not matter. It's all about the guidance. How many times we see this last quarter? And of course, what happens? It goes down 9% and it drags almost every one of them down with it between 1% and 3% on the day. And the reason why this is important, of course, because AMD reports tomorrow, which is a very big one. And of course, we had another semiconductor stock just report after hours, and they beat top and bottom line. But you know, we ain't seen the guidance yet. But I don't think it really matters because they dropped 2% right off the bat, and then it came back. Now they're down again. And so again, these trade in tandem. And don't forget to hit that like, subscribe button, guys, and share the video. It really helps beat the algorithm and push the videos out to new people and continue to grow the community. I really appreciate everything, guys. Which can suck, but the problem is the outlooks for all of them. I mean, you know, the car industry said that things are slowing. Everybody said things are slowing. Well, everything takes chips. So if everything's slowing, that's going to affect this industry, right? And so even though a lot of them make different types of chips for different things, it ain't really going to matter. So they're still trading in tandem, same way that FinTech was trading in tandem for a long time. They've kind of, like PayPal broke out on their own. Some others broke out, but, you know, mostly just trade in tandem. We'll see if that happens again this week when, like, SoFi and PayPal and Square report. If they drag each other down or up, that'll be interesting. But the semiconductors are doing that. We'll see about FinTech as well. Remember, we got, what, 1 reporting this week and 2 reporting Thursday, I believe. But if you look at the chart, I mean, I don't expect to see much till Wednesday happening. I mean, I know we got economic data coming out, but I believe we're just going to stay in that channel. I mean, we're still setting new highs on the RSI, on the daily. And, you know, obviously we're still sitting in that channel, which I think we're going to stay in. You can see, you know, we talked about it, how that 3,900 level is going to be tough to get through. And we've obviously tested it, got rejected, just kind of stayed right below it today. Again, nothing big out there. And that's why people are saying, you know, expecting 3,900 to be the rejection. But again, it's all about the Fed meeting, right? If the market hears something, whether it really exists or not, then, and they move higher and they break through 3,900, and even the bear said, yeah, then we're looking at around 4,100, between 4,050 to 4,100 on the S&P maybe. And so that'll be the next big test, and we'll be going up to fill that gap, the golden pocket on the Fibonacci levels, and I believe is the 200 moving average right there meets it. And so everything's sitting right there. And so, but again, it's all going to depend with the Fed. And let's be real. Look, I said something yesterday, I'll say it today. The Fed can't afford to do any kind of any pivot language at all, because if the market runs, that's bad for what they're trying to do. Because if the market runs, guess what's happening to yields? They're coming down, the dollar's coming down, and they can't afford that right now because CPI headline inflation is coming down at a snail's crawl, like from 8.6 to 8.4 to 8.3, 8.2. That's nothing. But core is actually creeping up, right? They hadn't even peaked that out yet, and that's what they really look at, right? And there's another measure they find or they look at, which is doing the same thing, right? They're not bringing it down at all, and what they're doing, as they said, takes time. So if all of a sudden you come out and just say, yeah, we're going to slow down these rate increases or anything like that, and the market goes, oh my God, really? And it starts running, then remember, the market's going to take 3 to 6 months ahead. That's what they're going to tell us, right? And so they're saying they're going to raise in December 50, and then January, let's say 25, and then there's a pause, right? It's either January or February. There's a pause. Maybe they don't got a meeting in January. Maybe it's February they got a meeting. And then they're going to just pause to see what's happening. Well, if you look, you can see what happened when they pause rates, right? Especially when the market starts to try to think ahead or whatever. Is it bullish? No, heck no, it's not bullish. I mean, it'd be functioning at almost a 5% Fed fund rate, and while they roll off their balance sheet, because there's no coincidence that as central banks have decreased their balance sheets, right, the stock markets have gone down. That's just the way it works, right? The stock market can't support itself without government intervention. That's just the way it is. And so, it won't be good. It won't be good for inflation. It'll come down even slower than what's coming out now. And you saw in Australia, I believe it was, they slowed down their rate hikes and inflation started going back up. And so, but again, I always said the one thing nobody talks about enough is the Fed's in a corner. They realize that they can't raise rates to 20%. They just cannot do it, right? You can't do that with $31 trillion of debt. It just doesn't work. You still have to service some of that debt. That's the way it is, right? And so people expect to get paid their interest. And so, that's the big problem. And it'll be the first time in history if they're able to bring down inflation without being able to raise the Fed funds rate over inflation, which has never happened. But if they do it, and that's why people say it's going to take a long, long time. And a lot of people say, well, yeah, but supply chains are going to fix themselves. Yes, if demand slows. But as you've seen here in America, we still spending it up, baby. We buy. That's what's happening. And so, that's just kind of where we're at. And that's what supply chains really can't fix themselves. They still can't find enough workers, right? And then what happened today in China? You got freaking, look at this. Disney comes out. So they had to shut down the park. And the people in there were basically locked in there until they can get a negative COVID test. I mean, how freaking crazy is that? You think that helps supply chains since we get everything from over there, right? I mean, they're still following that policy. That is mind-boggling. So at this point in time, how can you say they're not trying to bring us down at this point in time, right? Economically, I mean, really? They know how much we depend on them. And if supply chains don't get fixed, inflation just stays high, right? But they said their inflation is like 2.5. Maybe it is. I don't know. But, looking at that, I mean, that's just absolutely insane. Am I the only one that thinks that's insane? I don't know. Maybe I am. Now, let me know down in the comments what you think. But then we got, tomorrow, loaded earnings, right? And none of these will move the market. But, you're looking at SoFi, Uber, Pfizer, BP, Lilly, and then Toyota right out the gates. I think all the oil companies will obviously go through the moon with record profits. AMD is going to be the big one to look at. Devon will probably shoot through the moon as an energy company. Airbnb, interesting. I think they'll go up because I think we're still traveling. That's just a guess. Again, that's just what I think. Let me know what you think down in the comments. And then, of course, tomorrow, as far as data, ISM manufacturing, I think it's obviously going to continue to slow. And then you got the JOLTS job openings. This is going to be something the Fed will be looking at as well. So it could be another blah day, basically, where it just trades in that range. I mean, I'd be shocked if it just blew through 3,900 for what, And so, again, it could happen. But, unless we get some crazy economic data coming out or earnings just blow through the roof on all of them, maybe, I don't know. But that would make a whole lot of sense. But then again, we've seen that before, right? Where, you know, what is it? Buy the rumor, sell the news, whatever the hell it is. And so, you know, that kind of stuff. So we'll see. I mean, I think but I still think we just stay in that channel, hover around 3,900, somewhere in there before Wednesday. And then it'll be a really, really volatile day Wednesday. We know when the Fed meets, we get huge swings on those days before he starts to open his mouth to when he shuts his mouth, right? I've showed you that before. And yes, I would definitely be playing the Fed meeting as usual. I'll give it a shot. So anyway, hope you got something out of it. Go trick-or-treating. That's what I'm going to do. And I'll see you guys tomorrow.